Let's welcome in our headliner now. Adam Parker, the founder of Trivariate Research, joins us once again. It's nice to see you, AP.
Good to see you.
You want to talk some sense into the people on this program today who don't like energy? Because it seems like you sure do.
Yeah, I do. To me, it's sort of the golden triangle of awesomeness. I have upward earnings revisions, compelling valuation, and I have a good fundamental story, right? Demand growth exceeds supply growth. So, I know there's an 85% correlation between the change in the oil price and the change in net income of the energy sector. I don't really think it matters which one you own. So you can like shareholder return and you can like their portfolio positioning, but they're all going to go up with a pretty high correlation as you listed through the stock. So, yeah, I like it. And I think that the fact that there's $30 trillion that doesn't like it means that those that aren't burdened by that client demand and have the flexibility to buy it can and should. So that's a good opportunity. There's still 100 million barrels a day being consumed. I think the demise of it probably takes longer than other people think. So what I've learned so far in the 20 years plus of doing equities is when demand growth exceeds supply growth, you're long.
But what about the idea that, Kerry's investors, for example, just don't want any part of it? And Farmer Jim, he can't sell this stuff to anybody because they don't want a part of it. Does that hinder the future prospects for a space that even you think can go higher?
Sure. Look, if you take money from an allocator and they want you to have a certain set of restrictions, and you have to follow those restrictions. And for those of you who don't have those, then good, more for you. That's the way I look at it. There's still tons of upside. The sector is very cheap on price to book versus history, which historically was the most effective metric for predicting subsequent return. I agree with the comment that it's not, I think Joe's comment, it's not time, it's price. But I also think there's a distribution of outcomes. Obviously, we think very statistically at my firm and analytically. And our view is there's a bunch of outcomes, one of which is oil goes to 150, way more than just the 76 that it was in October 18. You're pretty short in terms of demand versus supply. So there's probability that various things happen. When you look at that, there's tremendous upside to the energy sector. I also think that's generally true for metals and mining as well, which we're also bullish on. To me, with sentiment where it is, with valuation where it is, and with sort of the relative estimate achievability, meaning the certainty that the current earnings estimates are achievable, I think that's a really good place to be in the market.
Well, you're pushing energy. It's up 2%, so highs of the day. Now, there is the ESG angle and the clients who don't want to touch it with a 10-foot pole. And then there is the point of view that was just tweeted to me that I want to read to you. Been too beaten up by my local Valero the last 4 years, despite analysts' recent calls to buy more. Love Joe and all on the show, but I can't do it anymore, right? It's the Steve Weiss perspective, right? I was in these stocks for a long time. I got my face ripped off. I don't need to go through the fact that energy was the worst performing sector in the market like 4 of the last 5 years, this year being the only time that it's ever done anything great. How do you counter that?
I like Bill Belichick. I'm a Patriots fan, and he always will just say, what does the 2018 season have to do with the 2021 season? It's a different set of players, a different set of dynamics, and I feel it's the same thing here. Who cares if you lost money in the past? We're trying to make money now going forward the next 6 months. If you can find a sector in the market that you can deploy and make more money than this, then I agree with that. Do that. I think that's what Steve said. But for me, I've got a very high correlation between the change in oil price and the change in net income. I know the estimates are achievable. I know there's going to be upward revisions. I know I have positive price momentum, and I still have pretty cheap stocks despite the rally.